Monday the 30th of May, European stocks are higher. The countdown to the close starts right now.
The countdown is on in Europe. This is Bloomberg Markets European Close with Guy Johnson and Alex Steele.
Four o'clock in London with 30 minutes to go until the close. Let's check and see exactly where equity markets are right now and then talk about some of the other assets. So you've got Stoxx 600 up. Luxury stocks are doing quite well. The reason for that, China reopening is potentially going to open the door to further profitability there after a period of long suppressed growth. You've also got euro dollar on the move as well today. So you've got a bit of a bid in euro dollar, 107.77. We're just seeing some comments coming through from Governor Waller over at the Fed. Governor Waller supporting hiking by 50 bits for several meetings. So there's this real debate around whether or not you get 2 more, 3 more, even potentially more than that, 50 basis point hikes from the Fed. And certainly it looks like Governor Waller's coming through at the hawkish end of that spectrum. So Chris Waller's talking about several 50 basis point hikes, and he's talking about moving above neutral, but basically he's kind of cautioning beyond that. Certainly he's supporting the move above neutral by year end. 50 basis point hikes ought to be on the table in until inflation is closer to 2%. Now, we're miles away from 2% right now. So if they keep hiking through that, we potentially could have an awfully long way to go. This obviously sits with the narrative we're developing here in Europe about the potential for the ECB to have to go faster. We've seen today a harmonised print out of Spain at 8.5%. You've got a harmonised print out of Germany at 8.7%. So there's a lot to discuss here. Then you've got to factor in what is happening with China as well. A reopening trade, that's going to boost demand, but it's also potentially going to ease up on the supply side, which could help deal with some of these inflationary headwinds that we're dealing with at the moment. So let's bring into the conversation to try and discuss all of this Bilal Hafeez, the CEO and head of research over at Macro Hive. Let's start with that. 50 basis point hikes for several meetings. You guys discuss this all the time at Macro Hive about how high the Fed ultimately is going to have to go. Where do you land at the moment?
I mean, we're actually very aggressive. So we think at least back to 5.25, which is where the Fed was before the global financial crisis. And we think there's a real possibility they could go to almost 8% based on the Taylor rules. It's a very punchy view, I know.
So 8%, equate that into equities for me.
That would be equities much lower in that context. And you know, equities, in our view, a large part of what's driven equities higher is lower interest rates since the global financial crisis, but also if we do get interest rates up to 8%, that will crush earnings. And at the moment, equities are fairly optimistic on earnings.
So your view is that the Fed is more worried about inflation and less about growth, so a recession is possible?
Absolutely,
almost probable in that kind of
almost
scenario
probable in that scenario. I think with the scenario of raising rates to not just 8, but even 4, 5, that's recession territory in our view. And the reason we say this is that inflation is very high in the US. So even if inflation does fall, it could end up being 4, 5% by the end of this year, inflation. And the Fed will need to raise rates a lot to get it down to 2%. And that's
Do you think they're really going to go for 2%? Yeah, I speak to a lot of people about this, and nobody seems to believe that the Fed, apart from Chris Waller apparently, is targeting 2%. The Fed will be happy with 3-4% inflation. That's the balancing act. You get inflation down, you get it to a manageable level, but you don't crash the economy into a wall.
I mean, it's obviously a delicate balance. I mean, I think in the end, a large part of it will be the political response to inflation at 3% or so. You know, will households still be complaining about inflation if inflation's at 3%?
So there's another headline crossed a little while ago. Joe Biden's going to meet with Fed Chair Jerome Powell Tuesday. So that could be an interesting meeting. How do you think that discussion will go? You just laid out an economy that's going to be hit hard. If you're a politician, and I know Joe Biden's been calling for the fact that the Fed needs to do its job and get inflation down, do you really want that? How do you think that meeting's going to go? If you were a fly on the wall, what do you think will be discussed there?
Well, I think the main focus there will be inflation. And if you look at political polling in the US, the biggest issue for the public is inflation, much more so than fears about the job market and so on. So
Right.
I think he will, encourage Powell to do something about inflation. The challenge here is that you have a supply shock going on as well. So the Fed only has a certain amount of control in this context. Now, if the Fed is the only tool you have to bring inflation down, then that means they'll have to raise rates dramatically if Biden isn't doing anything else on the other side, on the supply side.
Let's talk about the ECB a little bit. 8.7% printed Germany today. So you've got inflation up here, 8.7, and you've got the ECB down here with a negative 50 depot rate. How quickly does that spread need to close?
I think fairly quickly. I mean, what the ECB has been saying is that this is transitory. We've heard this before, with the US. It's also saying that a large amount of this is related to commodities, so not necessarily outside of commodities. Now, the data we're seeing at the moment tells us that even the turn in commodity-related inflation hasn't happened yet. So this was a month where inflation was supposed to come off a bit, but instead it's gone up a lot. So I think there's a huge amount of pressure by the ECB to do something. There still is this debate within the ECB on what to do here.
I'm going to come back and we're going to talk more about this in the next block. China is the other question that we're watching so carefully today. A reopening potentially in Beijing, a reopening potentially in Shanghai coming through this week. Is that good news or bad news? Because on the good news side, it's going to potentially ease up supply chain stories and it's going to potentially provide a little bit more demand. But that demand story could be negative as well. Oil prices back up to 120, potentially going higher from here.
Yeah, it's hard to say. Obviously, markets at the moment are taking it very positively because it's another bounce in Chinese demand. But for me, the larger question is how sustainable is this return, this lifting of the lockdown? Will we have another lockdown in a few weeks or not? What we don't know is the level of vaccination amongst the elderly population in China. That data is not easily available. Now, if the elderly population isn't highly vaccinated, then we know that there's a high probability of another lockdown if COVID cases pick up again. So I'm a bit sort of cautious around.
Is that your base case? Is that your base case that we will see a series of lockdowns? That this is not the ending of this process? That the economic impact is still not big enough for the Chinese authorities ultimately to back off zero COVID?
It's hard to tell. That's the issue here. And the problem here is not just about the economic fallout of this. Is that can you accept high level of deaths amongst the elderly population if they're not vaccinated? And so that's the issue here. It's more about deaths of the elderly more than anything else.
But from an investment point of view, is this an entry point into China? Is this, if we see more stimulus, is that going to help that entry point as well? It's interesting to see that Chinese equities did well today, but not that well. And tech stocks in particular haven't done that well even on the back of that.
I mean, we still have all the regulatory issues because it seems like even if there's some lightening regulation, ultimately the direction of travel is one of regulating the private sort of tech sector. The other issue is that the most common transmission mechanism for stimulus is the property sector. And we know the property sector is impaired in China right now. So there's only so much that you can get a boost from that side. So overall, I'm quite skeptical of the story. Near term, obviously, we could see some positive momentum. But bigger picture, I still think there's not enough from China to call this the big rally in markets.
OK, I want to come back. I want to talk more about what's happening with the ECB and the UK in just a moment. Fascinating call out from Bank of America, Bilal, a little bit earlier on. Bilal Hafiz, the CEO and head of research at Macro Hive, is sticking with us. Keeping you up to date now from around the world. Here with the First Word News, Angel Feliciano.
Guy, in Germany, inflation has hit another all-time high. That adds urgency to the European Central Bank's exit from pandemic-era stimulus. Consumer prices in Europe's biggest economy rose 8.7% from a year ago in May. Inflation was driven by soaring food and energy costs. European Union nations still haven't broken the stalemate over a Russian oil embargo. So far, Hungary is refusing to back a compromise on sanctions, despite proposals aimed at ensuring the country keeps receiving Russian oil.
We've been working very hard and successful with 5 sanction packages already. It's never been easy. It's the same now with the 6th package. The Commission and the French presidency have been working intensively in the last days to move forward on this package. We are not there yet, but it has matured for sure. My expectations are low that it will be solved in the next 48 hours.
All EU member nations have to agree on sanctions for them to be imposed. And in Nepal, the wreckage of a plane that crashed in the Himalayas has been discovered. The bodies of 17 of the 22 people on board have been recovered. The turboprop Twin Otter lost contact with an airport control tower Sunday while on a 20-minute flight. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
So German inflation hitting 8.7 in May. That is a data series high. Obviously, Germany has experienced higher inflation in the distant past, but this certainly adds to the urgency when it comes to the ECB and its exit from crisis-era stimulus. Let's go back to Frankfurt now. Jana Randau standing by for us. Jana, are we going to see an acceleration of the ECB's playbook here? The message from Christine Lagarde and her chief economist, Philip Lane, of late has been one of caution, but one of needing to do something in order to stem this inflation crisis. Is that caution going to prevail? Are we going to now have to see actually the ECB moving even quicker at a time when other central banks are certainly pressing on the accelerator?
There's certainly a case to be made for that. The ECB has always said it's very data dependent in its actions. And we've seen this morning that Spanish inflation has come in higher than expected this afternoon, that German price pressures are much stronger than expected. And we'll get an idea of where the euro area is tomorrow when data will arrive. And policymakers are meeting.
Sorry, carry on, Jana.
Yes. Policymakers are meeting, of course, very soon and will decide. Christine Lagarde has already said asset purchases will end at the start of July. Rate hikes will follow later on that month. And there is a debate to be had about how big that first rate increase will have to be. There are certainly voices that are getting louder from the hawkish side of the spectrum that 50 basis points
we
may
talked
be
about this.
appropriate.
Yeah, 50 basis points. How big a shift would that be? And would that be 50 basis points and then expecting the market to extrapolate more 50 basis points hikes in the way that the Fed is doing right now? What would be the message from a 50 basis point hike, do you think?
It's certainly not the mainstream scenario. Philip Lane has been rather cautious lately. But if you read carefully what President Lagarde has said, she doesn't exclude such a step. So she has said lift off in July, the end of negative rates by the end of the third quarter, whether that is zero or slightly positive for the deposit rate, which is currently at minus 0.5%. She said both is possible and will depend on data.
Yeah. What would how big a concern would fragmentation risk be at that point, were we to see a 50 basis point hike being delivered? You'd get a very big reaction in BTPs.
Yeah, I mean, that has been a concern for the past months. Fragmentation, bond yields have gone up across the region. And so far, policymakers don't seem to be extremely concerned about the spreads. They have widened, but not to the same extent that we've seen before in previous episodes of crises. The vice president said last week that spreads are nowhere near levels that trigger similar responses than in the past. So overall, it's quite contained. But clearly, there is a risk that the situation will deteriorate, and that is something that they're going to look very closely at.
Jana, great stuff as ever. Thank you very much indeed. Jana Randau joining us from Frankfurt. Still with us, Bilal Hafiz, CEO and head of research at Macro Hive. If the Fed's going to 8%, how high does the ECB need to go?
Well, much higher than what the market's pricing. I mean, it should go at least up to, say, 2-3% or so. However, the challenge for the ECB is that they are very worried about the economic fallout from the current sort of picture. So unlike the US, Europe has much more of an energy problem, and so they're trying to balance that out. And what's interesting with today's German inflation numbers are that Germany, while they have incredibly high inflation, they aren't calling for dramatic hikes by the ECB. And that tells you that the hit to the industrial sector is something that's top of mind for the German economy.
Do you think a 50 basis point hike is possible? Probable?
I think it's possible. I'm not sure if it's probable, just because the ECB is very cautious in how they're framing everything. So for now, I think 25 is the most likely outcome, but you can't rule it out.
And how do you think, to the question of fragmentation, how do you think BTPs react? I presume there'd be a massive sell-off.
Yeah, I think there'll be a big sell-off. The issue at the moment is that BTPs have sold off, but if you look at their sell-off relative to bonds and to treasuries, it's kind of what you'd expect in some ways. It hasn't weakened a lot more than the beta would say relative to those markets. So we're not in panic stage right now, but I do think if we were to see 50, it would widen quite significantly.
Can I just take you to the UK, Bank of America?
Sure.
And we were chuckling about this a little bit earlier on because there's been plenty of calls for sterling crises over the years. I think I've lived through many calls for it, but not many actual sterling crises, though I have lived through a few. So Bank of America is saying that investors should hedge for an existential sterling crisis as the British currency struggles usually associated with emerging markets. While not wishing to over-exaggerate GBP's predicament, as an end-of-day scenario, we are concerned that the increasing politicisation of the UK policy undermines the pound. This is the kind of end of that quote. Basically, we've seen a significant headwind on the supply side, a sense that the BOE is losing control over its mandate. I've seen these kinds of notes before. This time feels a little bit edgy for the UK, though. This time feels like it is actually sort of skirting on very, very thin ice. Skating even.
Yeah.
Or even skirting.
I think the UK does have these big challenges, but I would also say almost every other developed country also has the same issue. We talked about Germany and Europe, the US as well. Everybody has incredibly high inflation. Everybody has these same problems. Everybody has this challenge that central banks have been late to react to this inflation. So for me, the issue here is not so much about the UK, but it's more about developing markets as a whole. At the moment, the way the UK is behaving is similar to the way Europe's behaving in the US. So it's not, too different. So I think a sole focus on the UK may be somewhat myopic in the sense of you just have to look at the bigger picture. And overall, DM markets are seeing higher inflation than EM.
The issue with the UK is, and the Bank of America note addresses this, is that the UK is not prepared to talk about the supply side. We're not addressing, there doesn't seem to be much political narrative around Brexit, which is kind of almost a sort of unspoken at the moment. I think we're probably all glad that we're not speaking about Brexit in the same way that we were, but it has impacted the supply side. I'm starting to hear more and more calls for the fact that the UK, to your point that you made earlier, does need significant supply side reform, and probably is at the kind of the forefront of needing that to happen, and fairly soon. If it doesn't happen, what are the implications?
No, I agree. I mean, for sure, there has to be something on the supply side. And I do agree the Brexit aspect is very important for the UK. And I think that inflation is higher than it otherwise would be without Brexit. On the supply side issue, I think that the whole world needs a supply side, reboot.
Yep.
Europe needs to wean itself off Russian energy. US needs to deal with deglobalization. So this is not just a UK issue. Now, in terms of if the UK doesn't do these supply side reforms, then what that does mean is that UK will have chronically higher inflation than other countries. But the question is how much higher? And in general, say UK versus Euro inflation before the global before COVID, UK in general had 1% or 2% higher inflation than the Eurozone. It didn't have a full-on crisis around that time either. So I'd separate, a chronic or persistently high inflation from a crisis-type dynamic.
It would be remiss, and I think I said this to you last time, of me not to sort of speak to you about what is happening with Bitcoin because you track it so carefully. We seem to be quite range-bound on Bitcoin, kind of circa 30,000 at the moment. I'm hearing a lot of calls to the downside. I'm hearing some calls to the upside. What is your best case right now?
My overall case is bearish for Bitcoin. In the end, it's highly correlated to equities. And equity, to some extent, have also been treading water. S&P has been hovering around 4,000. We're up towards 4,200 now, and Bitcoin has been doing the same as well. But more generally, crypto, I think, has benefited a lot from low interest rates, just like tech stocks have. And so as we see interest rates go up, crypto will get hit quite hard. And I also think there's somewhat of a distinction that's starting to occur between Bitcoin and altcoins or other coins as well, where Bitcoin is viewed as more of a safe haven versus the other coins as well. So there's an interesting bifurcation that's also happening as well.
How much damage has been done structurally to the market, though, by the failures of the stable coins? There's a lot of a lot of kind of tourists in the crypto market. There was a lot of talk about institutional money flowing into the crypto market. How put off has that kind of money been as a result of the turbulence that we've been seeing? I appreciate the correlation with other assets, but structurally things have changed within the market as well.
Yeah, absolutely. I think there's, for me, I think the biggest shift has been more amongst the retail investors who are very sensitive to P&L, and many of them just came in on the expectation of higher returns. The institutional side, I think, ironically, has been less affected by the sell-offs. For them, there are other issues for them. The regulatory backdrop, how is regulation going to change to allow them to adopt these markets? So institutions, I think, are not necessarily as scared as you'll think. I think retail is the one that's really been affected by this.
You say you're bearish. How bearish?
Well, I think Bitcoin could easily go down towards 24,000, 25,000, in the next 3 to 6 months, perhaps even lower as well.
What will get it even lower? I've heard some people are talking about we could get back down to single digits.
Into below the 10,000s, into single. Yeah, I mean, that's also possible. I think the way that would happen is if we were to see much higher interest rates and a recession type dynamic. If that was to happen together, then that's very very
so let's bring this all together, this whole conversation. You started off the conversation talking about 8% interest rates in the United States. That would be stocks significantly lower. Where would that put Bitcoin by extension?
That would then put Bitcoin closer to the 9,000 mark at that stage if we were to see this.
Okay. It's been an interesting conversation, Bilal. Thank you very much indeed. Bilal Hafiz, CEO and Head of Research over at Macro Hive. We're heading towards the end of the day here in Europe. As I say, Memorial Day in the States, light volume, but nevertheless, some interesting trades going through. Luxury stocks have done well today. I've been surprised the car makers haven't done a little bit better, but nevertheless, luxury has powered Europe today. The European markets on light volume are up by around 0.6% with the stock 600. Brent's trading circa 120 again on that oil trade, picking up a bit of steam actually over the last hour. Yields are higher, prices of bonds are lower, particularly on the periphery on the back of the inflation prints. And euro dollar trading in the high 107s, 107.79. This is Bloomberg. So coming into the end of the day here in Europe, we're about to see the market close. Let's check some numbers before we get there. FTSE 100 up by 0.2%, flirting with 7,600 right now. What we're actually seeing today is some of the big drug stocks under quite significant pressure. You're not just seeing it in the UK, but you are seeing it in the UK to a greater extent. Over on the continent, you've got the DAX and the CAC 40 trading a little bit higher. The CAC 40 in particular is fascinating today. So it's the big luxury names that are really driving it. You've also got L'Oreal trading higher. I guess that fits into that narrative as well. But it's names like LVMH and Kering that are doing a lot of the heavy lifting. This on the back of China starting to talk about the fact that it's going to loosen some of the restrictions. The luxury stocks have huge exposure into China, as we all know. So any kind of a sign, potentially, that we are going to see some of the restrictions going, and these stocks respond very, very quickly. Big high beta trades. So the CAC 40 up by 0.6%, but names like Sanofi are still weaker today. Anyway, the European close is coming up. We'll deal with the details in just a moment. It is light volume today. It is Memorial Day in the United States. This is Bloomberg. So we're wrapping up the session here in Europe. It's a Monday. It's a quiet Monday. The US is out. Volumes are light. Nevertheless, I think some interesting trades that are worth focusing on. This is the picture across Europe. So the CAC 40 and the DAX are both up 0.7%. Underperformance coming through, though, from the UK today, which is interesting. Drug stocks in particular look like some real heavyweight drug stocks I'm talking about here. Looks like they're underperforming a little bit. So the FTSE 100 actually being dragged down there. Some of the oil stocks, interesting enough, are also not putting on some gains today, despite actually some higher Brent prices we're seeing. So the DAX is up by 0.8%. The CAC 40 up by 0.7%. How's the session developed? As I say, it's been a cautious session. Without the United States to add the volume in, we are seeing a slightly lighter volume day. So this has been how we've been trading. Relatively tight range. Nothing really to give us a clear sense of direction. Bit of a gap higher first thing on the back of the China news. And then, to be honest, we've just drifted higher. We're only up by 0.6%. And as I say, a little bit of a drift higher coming through here. In terms of the sector breakdown and some of the other asset classes that we're watching, let's take a little look at first the other assets because they are contributing into some of the moves that we're seeing. Brent crude trading circa 120. The German 10-year is up by 8 basis points today. But take a look at the periphery. This on the back of some really strong inflation prints from Spain and Germany today. Tomorrow we get the Eurozone number. Watch out for it. People are beginning to talk, and Jana Randau was talking about this a little bit earlier from Frankfurt, talking about the idea that you could see 50 basis points coming through from the ECB. That would certainly propel the euro-dollar significantly higher. We're up by around 0.4% today, trading at 107. High 107s, nearly 108 right now. Quick look at the sector breakdown, just as we work our way through this, just to give you an idea of what is happening here, because I think it is significant. Definitely a China-focused story today, I would argue. So you're seeing the luxury stocks doing well today. That sector up by around 2.5%. Technology's doing well. Travel and leisure, interestingly enough, also having a fairly solid day today. Retail's doing well. Bottom end, much more defensive bias to this market. Utilities, telecoms, food and beverage. That's where you're seeing the underperformance coming through today. So definitely a kind of more risk-on sense from a sector story in this market. Let's talk about some individual stocks. I've just been mentioning what's happening in the luxury sector, but I want to start with Cineworld. Top Gun Maverick came out this weekend. I think Europe actually got to see it even before the United States. Certainly my kids are itching to go and watch it, as am I. A lot of people have already been to see it. It was an absolute smash at the cinemas this weekend. And as a result, we are seeing, as you can see, Cineworld Group trading up really strongly on the back of that. 14, nearly 15% the gain on the back of Maverick being back. Luxury stocks, though, are doing well. LVMH up by nearly 3%. That's a hugely heavily weighted story. And then I was maybe going to talk about Daimler Cars. We've got Daimler Trucks, but nevertheless, the China story probably fits into that narrative as well. China, a big factor when it comes to the auto sector. Some interesting changes in the quota system out in China in terms of people being able to buy vehicles, which, remember, is heavily quotarized, and also some big bonuses coming through in terms of EV purchases as well. Remember, we have seen virtually no cars being sold in China over the last few months. The China story, very much part of the narrative that we've been watching with our MLive team today, our Markets Live team, very much focused on what is happening with the Chinese economy and what investors anticipate on what happens next with COVID zero policies and the impact that they're going to have on the markets. China PMIs, remember, due tomorrow, going to provide us with some new indications as to whether or not growth is bottoming out, even as restrictions in those major cities continue. This is what we've heard.
I like China.
Many people calling it uninvestable, but there's also a very wide margin of safety.
September, October, they will start one of the biggest fiscal impulses in human history.
We've turned the corner in terms of policy action, and that should be supportive for markets.
And there's also a possibility that they reopen and that they stimulate the economy.
Probably is the part of the world where you'll see economic activity resume more quickly.
A lot of the attractive long-term growth drivers are still intact. We will be cautious and prudent in this environment, but are optimistic about China as a country.
We're expecting to increase our exposure in China.
I actually just see a deepening of relationships into China.
Really mixed views. Amazing. Very wide dispersion. Nobody can quite call China right now, or at least have a degree of confidence in doing so. One area that we've been watching certainly very carefully is what has been happening in the car market. Now, EV growth forecasts are tumbling. Shanghai last month, not a single vehicle was sold. So let's talk about what reopening could bring to this market. Craig Trudell, Bloomberg Global Auto reporter, joining us now to give us a sense. Just the background, how much of an impact have these lockdowns have in terms of the huge Chinese car market?
Yeah, you mentioned the city of Shanghai. I mean, it was really breathtaking to see a goose egg for last month. And it's not just obviously the sales, right? It's the production. And that is actually a city that is a major source of production for companies like Tesla.
Yep.
And I mean, you know, you've also seen major disruptions to Volkswagen and Toyota. So, you know, just today we saw out of Toyota a lower than expected production for the month of April. They still have managed to better, you know, sort of struggle through this disruption that they felt in China than Volkswagen, which, you know, through April, worldwide sales down 30% for Volkswagen. So, you know, this market getting back on its feet production-wise is going to be a big deal for companies that have a lot of exposure. VW, among the foreign car makers, is as big as they come still, even after a couple of, you know, rough months and rough years, honestly, for them.
I want to talk about demand in just a moment, but also you talk to the auto producers and they reference China when it comes to not just their plants in China, but their plants around the world because of the supply chain and the component parts that are so dependent on China. if we start to see a reopening, how quickly do we start to see that easing?
Well, we saw even just with Tesla today, a Reuters report sort of, laying out the idea that Tesla has gotten close to 70% of pre-lockdown production levels. So, this has been a sort of day-to-day, week-to-week thing that has been followed very closely, just, as is the nature of all things Tesla. And they really have sort of had a lot of false positives and sort of thinking that they're going to get back up, if not fully on their feet, close to it. It's going to be difficult. It's going to be really challenging because you don't just spool up a supply chain overnight. As much as China is sort of renowned for being able to sort of, more quickly and more quickly adapt to the realities and sort of on a dime change, plans. It is difficult even for China to sort of, go from zero or close to it back to where they were before all of these lockdowns.
Okay, let's say from supply to demand. As you say, like Shanghai, zero. Amazing to see a huge city like that with no vehicle sales. The Chinese authorities, and it feels like they're tiptoeing into this, are starting to announce a few little things to help out consumers. Can you just walk us through what we're seeing and what impact you think they might have?
Yeah, to be honest, the authorities probably don't have to do much. I mean, if you look at the way sales have been trending globally, really with the exception of here in Europe, auto sales demand has actually been extremely strong. This has been a production constrained story. But to your point, we are seeing a little bit of support in more rural areas for electric vehels. Those are some of the places that arguably need a little bit more help, whereas in some of the mega cities, you don't necessarily need more subsidies. So we're going to see a phase out, is at least the plan still at the end of this year in terms of national subsidies, but we'll still see support on a more local level and a bit more targeted. And there is a sort of question of whether or not that phase out the end of this year might also be reconsidered. That we've seen some rumblings of that recently. There is just a question of whether or not that's really needed, because we have seen really strong uptake in China versus really anywhere else in the world.
Yeah, it's going to be interesting to see what the long-lasting effect of all of this is. Craig, great stuff, as ever. Thank you very much indeed. Bloomberg's Craig Trudell on what is happening with the reopening story and the auto market. European stocks have finished for the day. Let me just give you a quick idea of what has happened in terms of the auction, just to see what has happened. A little dip by the looks of things, judging by those numbers that I see on the screen in front of me. Yeah, but not much of one. Just a tiny kind of movement during the auction process that has taken us to a position where we're almost exactly on that 7,600 level for the FTSE 100. So those are the closing prices for European equity markets. Let's get up to date now with the news from around the world. Here with the first word, Angel Feliciano.
Guy, China has reported the fewest new cases of the coronavirus in almost 3 months. The easing of outbreaks in Beijing and Shanghai has led officials to relax some of the strictest virus controls. Shanghai has rolled out a raft of measures to support its lockdown-hit economy. Russia is planning a bond payment mechanism to sidestep U.S. sanctions and a potential default. The proposal would allow foreign investors to open accounts in Russian banks in both rubles and hard currency. Russia's finance minister told a newspaper that unlike the previous payment system, investors would be able to access the funds without restriction. And on Capitol Hill, lawmakers are setting a timetable to negotiate a new gun laws. Democrats are signaling they would accept limited progress in exchange for some action that would reduce gun violence in the nation. Some Republicans are indicating interest in gun control legislation following the elementary school massacre in Texas. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Angel Feliciano. This is Bloomberg.
So, European leaders are gathered today in Brussels. They are discussing, obviously, the oil embargo on Russia. Estonia's Prime Minister said earlier to Bloomberg that an EU agreement on Russian oil and the embargo upon it is unlikely to be reached today. She spoke to Bloomberg's Maria Tadeo before walking into the summit.
It seems to me that we not reach an agreement today.
You won't?
No, that we will not. But maybe there is positive outcome of this. I know that there's a lot of work going on still.
And of course, when you see this from the outside, the reality is it's been almost a month since the head of the Commission announced this. The European Union promised the mother of all sanctions. If you're Russia and you look at the situation, perhaps you spot weakness. Is that a problem?
Well, Russia and Putin doesn't believe in multilateralism, and so far we have been very united, which has been a huge exercise considering that we had 27 different countries with 27 different internal politics going on. But we still try to keep the unity, and sometimes it was clear in the beginning that it will be more difficult when the sanctions move closer to us. First, there were sanctions that only hurt Russia, but now there are sanctions that also hurt European countries, and therefore we have different sensitivities.
And of course, you say the impact will be felt now by Europeans. There is no war that doesn't carry a cost. I wonder, however, all of this has to do with the victory of Ukraine. What is victory? What does it mean in your eyes? What's a victory of Ukraine over Russia? What does it look like?
Well, it's first of all to the Ukrainians to say, but when Russia goes back to its borders and also the war crimes are being punished for, prosecuted internationally so that aggression does not pay off. That is a clear sign, a signal to everybody that it can't work like this, that we have a peace agreement and everybody stays where they are, because a bad peace might mean that there are still atrocities for the people of those territories, and there will be a pause of 1 year, 2 years, and everything will continue in a much broader scale. So we have to be very firm.
Prime Minister Haller speaking to Bloomberg's Maria today a little earlier in Brussels. Let's get some more insight into what is happening here. Elizabeth Brawl, resident fellow at the American Enterprise Institute, joining us now. Are we reaching the limits of what Europe can do when it comes to sanctioning Russia? We are struggling to get a deal done on oil. Makes you wonder whether gas would ever be possible.
We are, in a sense, reaching a limit, and for two reasons, I think, as the Prime Minister pointed out. We are now talking about sanctions that wouldn't just hurt Russia, but would hurt European companies and, as a result, European consumers as well. And, in addition, the public is getting a little bit fatigued with this war. It's a terrible thing to say, but the war has been going on for 3 months, and obviously it's a tragedy for Ukraine. But the extreme interest that we saw in the early days of the war in Europe is wearing off, simply because it has been around for some time now, and it's terrible because the war is not over. But yet, the public, in order for sanctions to be successful, the public has to support them.
Absolutely. Just staying with the issue of the oil sanctions, Hungary is not budging. Does Hungary budge, do you think?
There are two issues there. Prime Minister Orban is clearly a bit of a difficult character within the European Union. Yeah. But there is also the other thing, which is that Hungary is extremely dependent on Russian energy. So if they were to agree to an embargo, they would have to find enormous amounts of energy somewhere else. And the tragedy is really that everybody is looking for energy somewhere else, and it would be very difficult for them to replace all that energy that they currently have coming from Russia with another source, when everybody else is looking for other sources as well.
As you say, the public is now shifting its attention away from the war. There is a certain amount of fatigue beginning to creep in, but the focus is now on the cost of living crisis. So energy prices are going up, but food prices are also rising at a fairly dramatic rate. There was a conversation earlier between Vladimir Putin and President Erdogan of Turkey talking about the Black Sea and grain shipments. Is this the next flashpoint, do you think, here? Trying to figure out a way of getting Ukrainian grain, other grains, out through the Black Sea and onto world markets?
That is what Western leaders are trying to make happen. It's extremely difficult, but the reality is that at the moment, the grain that the world needs, especially developing countries, but emerging economies, wealthy countries as well, the grain that we all need is sitting in Ukrainian storage facilities and can't get out because Ukrainian ports are blocked, and it's too dangerous to ship it through the Black Sea. So Western leaders are trying to figure out, and have been trying to figure out for some time now, whether they can, for example, provide naval escorts. But at the end of the day, it's up to shipping companies whether they consider the risk acceptable.
Is that possible? Do you think that we could see naval vessels being used to escort ships out? we've been worried about putting a no-fly zone in and putting effectively NATO aircraft up against Russian aircraft. Presumably we'd be in a situation here where you'd be putting NATO marine vessels and Russian marine vessels, navies, in exactly the same scenario.
Very close to each other, and I wish I could say it's a workable scenario. I think it would be highly risky. It would have to be led by the US, and as you say, it would put any participating navy in very close proximity and also at risk of some sort of accidental
clash.
Exactly, with Russian navy vessels in the Black Sea. So as much as we want that grain, I think the prospect of a naval escort provided by the US and other countries is just very dim at the moment.
So that grain stays in Ukraine, do you think? Or do you think there's another way out? Could it come down through Turkey? Are there other exit mechanisms to get that onto world markets?
There are limited alternatives, for example, getting it out the landway or getting it out through river ports, but that's much smaller quantities we're talking about. Romania is trying to help, but of course then the grain has to get to Romania first and then out of Romanian ports. So shipping really is the lifeline of the globalized economy, and at the moment Ukraine is shut out of it.
Let's talk a little bit about NATO and its expansion. Do you think Sweden and Finland are going to join?
I think they will join. The question is whether they will receive their official invitation before the NATO summit in Madrid at the end of June. That's what everybody was hoping would happen, and in fact was assuming would happen. Then Turkey came along and delayed the whole process with its objections over, in particular, Sweden's relations with militant Kurds.
Do you think, how long could it be delayed for? Erdogan has a huge issue with the Kurds. He's also potentially going to be facing an election. That election could be pulled forward. It's a major, major problem for him at the moment. When do you think he will allow it to happen?
I think at the beginning we were all thinking this is some sort of way for him to get concessions from the United States, for example, F-35s. Exactly. But now he has put specific demands to Sweden, that Sweden, for example, rescind its suspension of arms exports to Turkey, that it curtail its relations with the specific Kurdish groups, and unless Sweden meets those demands, he's not going to back down. So it wasn't just a game to get F-35s. He clearly has a major grievance regarding Sweden in particular and the Kurds. So I think he can drag it out for quite a long time to get that concession, at least.
What does quite a long time mean? Is this months or is it years? Is it how long does this last for? As I say, there are elections potentially coming in Turkey.
I think, at the very least, until the elections. Then he can drop that subject, I think, after that, because he will have other issues on the agenda that will be more urgent to Turkish voters. But it's not going to be within the next few weeks. And unfortunately, this demonstrates NATO weakness. Just at the moment when NATO looked so strong and united, this issue completely unexpectedly comes along and demonstrates that NATO is not united.
And where does that leave Erdogan, do you think, in the long run, in terms of his relations, Turkey's relations with NATO allies? At the moment, he's being seen as difficult. Is that his new role in NATO? Is that, the southern flank remains important and critical in some ways? NATO can't remove him, but how does the relationship change, do you think, between Turkey and the rest of NATO?
He has been seen as difficult for a long time, but I think now he's seen as practically unbearable, but he doesn't care because he knows that Turkey can't be kicked out, just like no other NATO member state can be kicked out. And as you mentioned, Turkey is vital strategically to NATO. It has played that role ever since it joined decades ago, and everybody was aware at the time that Turkey was not an ideal candidate, but they wanted it because it was it's strategically located. So I think he's relishing the role of being the difficult boy because he gets things out of it, because everybody knows that it's in their interest to keep NATO as harmonious as possible.
Elizabeth, we're going to leave it there. Interesting conversation. Thank you very much indeed. Elizabeth Broad, Resident Fellow at the American Enterprise Institute. OK, we're nearly done, but we need to talk about what happens over the next 24 hours. We need to talk about what is going to be happening over a busy week. In terms of what we're going to be watching over the next 24 hours, inflation prints. Inflation across the Eurozone. We get data out tomorrow. We also get data out of the US and China. This is Bloomberg. So plenty coming up over the next 24 hours. One of the highlights I'm going to be watching out for is a meeting that I think is going to be taking place tomorrow between President Biden and Mr. Powell. I think it's going to be a fascinating conversation that these markets are certainly going to pay attention to. Today, I think in some ways, a bit of a warm-up event for tomorrow. We've got a lot of inflation data out of Europe today, but we get the headline numbers tomorrow. Euro area flash CPI inflation, French and Italian headline inflation, consumer confidence out of the US, and China PMIs. But this all comes down, I think, to the relationship between politics and monetary policy. And that meeting in the White House tomorrow, I think, is going to be fascinating. Powell and Biden. Chris Waller, remember today, has signaled that basically he wants to hike until it hurts the US economy. Is that going to be the message coming out of that meeting as well? We're going to have some great coverage lined up for tomorrow. Hope you enjoyed the show. This is Bloomberg.